today with Mandi Pour Rafsendjani, who is in Melbourne, Australia. How's it going, Mandi?
Really well, thank you, Etienne.
Awesome.
How
Today,
about
I
you?
want to take some time to discuss overtrading, and I know you're really good at talking about this topic and helping people overtrade less or actually reduce the number of trades. But it's not just about the number of trades; it's more about kind of taking the trades you're supposed to take and not taking more of them. So let's begin with this. How do you think, or how would you define overtrading? Because someone would think that they could take a lot of trades and they have to take more trades, but what is the stage where you get to overtrading, in your opinion?
Yeah, I think the benchmark or the signs of our trading are really simple. If you make several trades in a row and they're losing trades, if you make trades based on feeling frustration, based on feeling annoyed, so based on these feelings that cause or are maybe triggered from anxiety and are stress induced. Over trading is always taking many trades. Like, I know, so Rohit says there's no sound. Can you just check that we have sound?
Yeah, we should have some. Just check
Okay,
your
cool.
device, or maybe it's on your side, and let us know.
Okay.
And someone else can comment below if you have sound in that. Yeah.
Good. So over trading is not necessarily putting on a lot of trades, because sometimes we're on a roll, right? Sometimes the market is just so perfect for us. And I have seen traders who take 100 trades a day, and they're trading really, really well. So over trading is always judged by, do you trade based on an uncomfortable emotion that you want to escape, or based on anxiety? And are these trades creating losses? Very, very simple. Yeah, digging yourself into a hole. So that's where I
So
would
technically, if
start.
you take one trade and the second one you take is because you lost the first one, then that would be overtrading, right?
Yes, I would classify that already as overtrading. We can give it so many different names: revenge trading, going on tilt. In the end, it's all the same, right? It's taking trade setups that are not based on our strategy. There are trade setups that are not suitable for the market. For example, in today's market on the US indices, for example, it's when I was still asleep, it was just easy going up, all the short setups failed. And if you were to continue taking short setups in this market that was clearly driven by algos, I would classify that as overtrading. And you mentioned something really useful and really important. Where is the trigger? Where does it start? And the emails that I get when someone talks about overtrading, revenge trading, going on tilt, it always starts as a story of, so one story, I planned my trade, I was ready for the setup came and I didn't take it. Then the trade turned out to be really well, and I felt left behind. FOMO kicked in. I was angry at myself. I was frustrated. And then I jumped into the next trade and jumped into the next trade and jumped into the next trade, not based on setups, but based on because I felt so angry and needed to get my anger out almost. So that's one version. Another version is where a trader, and for example, I had a trader emailing me yesterday, an Australian-based trader. So he was short on the Aussie market, the XJO, and he was short quite a biggish position. And because the US market went quite strong into the close, he thought that our market was going to continue the strength and go up short at $150 loss, and thought, I go long now and double up, right? Make up for this $150 loss. And what happened? The Aussie market completely collapsed. So in the end, he got out at an $800 loss again with his two long positions. So thank God he emailed me straight away and we could deal with the frustration. So he didn't need to go more and more until, because what he would have done in the past is he wouldn't have stopped at the $800 loss. then he would have tried to get that $800 loss back and put on more and more and more trades out of frustration. What is also really, really interesting, Etienne, is that, so in this case, he was long. The market came down really, really hard and fast. In the past, and this is what many traders do, because they miss the initial short setup, they then try to go long. Or if the market goes long like last night and they missed the initial long, they would try to short the market. And it is one of those human behavioral things, biological biases, I don't know, who cares? All we need to know is that the natural inkling is after we miss the trade, let's say a long trade, we naturally try to look for a reversal, a short, rather than looking for a continuation pattern when the market is long. Strong, not long. So when the market is strong. And the same with when we missed the initial short trade, which what happened with my trader yesterday in the Australian market, then they naturally look at going long, rather than really sitting back and saying, all right, is that an impulse trade market where I only look for reload zones, as Linda Rushke calls it. So looking for little retracements, and then continuing further into the direction, so continuation patterns, or is a reverse shortly. So many different setups that trigger going on tilt or revenge trading or over trading. What are your experiences?
Now, are these actions of overtrading, are these natural behaviors, or because we're humans and because of how our brain works, or are these things that we kind of created or that came up as a result of an underlying issue or something else we have to deal with?
So, yeah, I'm not quite sure. I would say this learned behavior, so to some part, and it's also biologically induced. We are naturally wired to avoid threat. And so our senses, our 5 senses, are designed to identify where is a threat, where is a danger coming from, so that we can deal with it. And then, we know all about the fight and the flight response. So I would say a good part is biology, how we are wired naturally. And another good part is how we have been trained, how our conditioning, our programming. And that's really exciting news, because we can work on both levels, right? So number one, we identify and we are aware that, as I said before, for some reason we have these biases, how we naturally and automatically would respond. And when we know what that is like, then we can change our behavior. So for example, our body is not designed, I said it a few times, to do ballet, right? In ballet, they the toes to the outside. But our hips are not designed to point toes to the outside. And so ballet have to practice a lot to do that. And the body is amiable, so the body can change. And it's the same with our mind, with our brain. So even though we are designed for fight and flight, when you, for example, you have a trader who is in a profitable trade, I hear that a lot as well, and they are afraid now to give back the profits. And now they have the urge to micromanage, to get out of this trade before it has hit their profit target and before there's even an exit given, right? So I was working with a trader, I was doing a live trading session with him. And so he entered the trade, and a really excellent trader. And so that was his challenge, right? That he would get out of the trade too early. That was one thing. And on the flip side, when he was in profit and the trade would turn around before it had hit his profit target, he would not get out, hoping it goes back into his profit target. And so he had these two really opposing challenges going on. And as we were doing the live trading session, we had this trade that went, so was on the 3-minute chart. And so bar opened, right, where he entered, and then the next bar was open higher, close higher, open higher, close higher, open higher, close higher, right? So there was no reason to exit. And he's like, I really, really have the urge to press that button, get my profits and run. And I said, just stay with it, right? That's okay. There's no exit given as yet. And then it hit a little, so that was the DAX, right, opening up. And then the DAX started to pause. And the DAX started to reverse. And I thought now, because now the bar, the highest bar that we had, the last bar, the low was taken out. And I said, let's just get out here. It doesn't matter. You know, we had a nice profit. And let's lock it in and be happy. And he said, now I don't want to get out. I'm hoping it goes back up to where it was before, right? So at the top of that 3-minute bar. And so you can see how his thinking was really contrary to what good trading in terms of how we make profits would work. Now, what we identified in the initial setup, when he had the urge to get out, even though there was no exit given, that was all his own biology, his limiting beliefs around being able to keep money, what he deserves, and so on, right? So we could resolve this. And I said to him, just stay with one more bar. This still opens higher, closes higher. Wait for the next bar, opens higher, closes higher. You can take the emotion. That's all right. You don't need to feel happy or good about it. Just feel whatever you feel, but do what needs to be done. And so he did, right? And it was an amazing experience for him to prove to him that no matter what he feels, the anxiety he feels, the fears that he feels, he can still focus on the chart and wait for the exit signal to be given. Now, when the trade turned around and then he didn't want to get out, that was also very interesting for him, because what we then identified was that he didn't have a proper exit strategy. Proper is maybe the wrong word. An exit strategy that works for him. He said, my exit would have been much lower at this moving average, whereas when I asked him to exit the trade, it was really clear underneath the low of the previous bullish bar. So what we identified was that his exit strategy was not suitable for him to perform well, because he would give so much back that he would have this pinch of regret. And I said to him, get out as soon as this low of the bar is taken. You can always re-enter if need be. And so you can see it was not all driven. It was also that his technical exit needed some work. And so he could improve. Massive results. Yeah.
Mm-hmm. You mentioned something really interesting, which is the fact that overtrading would be caused by limiting belief about money. So if I understand it right, then I'm sure you can expand on that, but that would be the fact that you think you cannot make a lot of money, so you try to cash every single kind of dollar or cent you can get in the market. Would that be right? Or what else is there to it?
So many different ways of how we can have limiting beliefs around money, Etienne. Where do I start? So I start with a trader that I was working with. With your example first. So when we have been brought up, let's say, I call it the little sister or little syndrome, where when we are a younger born, I'm generalizing here also now, we always have the experience that someone else is better than us and that we can't do it, that we need someone else to help us. Because this is what happens when we are little, right? There's always the older brother or the older sister who does things better and they help us out. And I remember my brother who, always loved me so much and took care of me. I remember when I wanted to learn how to tie my shoelaces. For some reason, I remember that, right? And I was still tiny. My brother would come say, no, this is not how, then he would tie my shoelaces for me out of love, right? Brotherly love. But this is really damaging for a child, because then I was conditioned that I can't do it. I need someone else to do it for me. So that could be a limiting belief, which indeed I battled with for a long time. And not just in trading, obviously, everywhere, but only in trading became so apparent and so obvious that I then could work with it. And consequently, all my life fell into place as well, like a domino effect. Was so freeing. So when we have this experience that we are not good enough, that we can't do it, then, as you said, we are afraid all the time that that we can't do it, that we are right about not being good enough. And then on the flip side, we then try to prove to ourselves and to the world that we can do it. And as Templeton said, Sir John Templeton, he said, we lose money in the attempt not to lose money. So if you're afraid to lose money, then this is what happens. We have this German saying, you, how do I translate that? You attract exactly what you're afraid of. Sounds really good in German, but you know, that would be the context of the saying. And it's so true. So if you're someone who is afraid that you can't make it in trading, then you will try to prove that you are good enough. And that's where the overtrading will then come in, where you're trying too hard, the too hard trying. And then your brain doesn't work either because it comes from the fight and flight response. So this is one example, Etienne, where, you know, as you said, the limiting belief, I'm afraid I can't do it. I try too hard to show I can do it. And then it's not working. So another version of limiting money beliefs is I was working with a trader who grew up in a Latin American country, and he's from a middle-class family. They were quite well off. And then due to corruption and due to other political aspects in this country, the family lost everything overnight. And they became really, really poor. And as you know, in most Latin American countries, no social security like we have it here in Australia or in Canada. And you living in Thailand, you know what it's like. There is no social security either. And there was a real big eye opener for me when I lived in Hong Kong. I, moved from Germany, where life was sheltered and taken care of and safe, to Hong Kong, where people would either work or they wouldn't eat. So that, like, a complete different world to me, was such an eye-opener. And so for him, for this trader, the fear of losing money or the fear of it is driven by that childhood experience. He was about 10, seeing his parents going through the pain, feeling the anger and the frustration and the helplessness because it was induced by someone else who was corrupt. And there's nothing they could do about it. So that could be how the limiting money beliefs come into play. And in his case, he would always micromanage. Every time he has a little bit of a profit, he's getting out of the trade, out of this really deep-seated fear. So for him, we had to do some trauma work because it was trauma. And the anxiety that he experienced in trading was based on the trauma, so external world. Whereas the example that we had at the beginning that you brought up was based on internal self-image. So again, there's so many different variations to limiting money beliefs.
Very interesting. I find this stuff really fascinating and interesting. So if you're watching this live and you have any question from Mandi, make sure you comment below in the chat. We'll be asking your question to Mandi on overtrading or psychology in general. And we'll do a kind of Q&A pretty soon. So tell me about self-image, Mandi. How does that work? How does that impact trading?
Yeah. So self-image is usually how we see ourselves, how we think others see us. How we think others see us, that triggers a fear of rejection. If we have fear of rejection, then we are trying everything not to be rejected, right? So, for example, I was working with a trader who was hanging on to losing trades, and we looked at what is going on for him. Why is he holding on to those losing trades? And it came from the drive of not wanting to let down his family. His wife was hoping for him to be $1 million trader soon and give them freedom and independence and traveling the world. So a lot of pressure and unrealistic pressure on him. And out of the fear of letting his wife down and she then leaving him, which had nothing to do with reality. It was just unconscious, again, programming that he had from experiences as a child where he experienced abandonment. That was then playing out in his trading. So the self-image was that he is not lovable unless he has something materialistic to offer. And if he doesn't have anything materialistic to offer, then people would leave him. Not surprisingly, he was very successful in his job, right? There's a direct company making a lot of money, very driven, but in trading that worked against him because he was trying too hard. He was forcing himself onto the trades. Right? So when you see you did really well, then you give money back, and then you try to force it to get your profits back that you lost. It shows like aggressively pressing that mouse button. And what happens inside of our body and our mind is really that, I'm sure everybody can relate to this, when we, for example, get profit back. So I was working with a trader, $1,500 in profit, didn't take the profit, and the market moved so fast and hard. In no time, he was $500 in a loss and then got out. So after that happened, he's someone who's really very charismatic and action taker. He loves adrenaline. And what he did then is he would start aggressively getting into the market because the energy creeps up, builds up in our body, like, like feeling impatient when you're sitting in the car and you're stuck in traffic and you're like, oh, let me out of here. And so to release that pressure, he would then press that mouse button. The moment he presses the mouse button, it was like a relief, like, but then of course the pressure starts again because the trade was not taken based on strategy or methodology or planning and analysis. It was taken based on, I need to get this energy out. So what we call that is that this is called self-regulation. What he hasn't learned is how to self-regulate, how to self-regulate when he's angry and getting back to baseline and feeling calm. How to self-regulate when he is afraid and getting back to tapping into his confidence and certainty. Self-regulation also in terms of when you have a loss. So it was another trader that I worked with. He was $4,000 in profits and then ended up, taking $200 profits. And so for him, he then had another trade setting up. It was a really good market for his kind of strategy. Now he was again in a good profit, like $3,000 or something close to the 4,000 that he gave away in the first trade. Again, didn't get out of the trade, and the trade came right back, and he got out at a little loss. So the reason why he got out of the little loss was because he was waiting for this trade to cover the whole $4,000 that he didn't get in the first trade. So when we know, and I have done it so many times, I'm sure you have as well, how I manage that and how I tell my traders to manage that is to say, when you have a big profit that you missed out on, or you have a bigger loss, I say, now I'm at risk of doing something really, really stupid. So knowing that, I know exactly, and I wrote down everything that I was thinking, that I was feeling, so that I have a high level of self-awareness, because only with self-awareness we can do something about it, right? So I knew that in that moment when I had a bigger loss, I wanted to make it all back because it felt so horrible. Then I would say to myself, Mandi, you don't need to make it all back at once. You can make that back in like little $500 increments. And so really talking myself calm and logical, and I know you have the urge to make it back, but take a $10 profit here and $10 profit there, and then positively reinforce myself. Well done for taking a $10 profit. Yeah. So really, this is what we call self-regulation. Self-regulation in my model of the world is one of the key elements in trading, and it's not something that most of us are born with. It's something that our parents are supposed to teach us. And I don't know, my poor parents didn't know how to do self-regulation and didn't know how to teach me. So I had to train myself, and now I can share that with my traders as well. Yeah. Did it answer the question?
Definitely in that, but that's definitely interesting. So when it comes to avoiding trades, so doing the opposite of over trading, you tend to like go away from the market. Does that come from the same aspect, the same limiting belief and the same thoughts, or is that something different?
So that also can come from limiting beliefs. It also can come from that maybe the trader is not suited for that kind of trading. So let's say it is someone who does scalping and they keep missing trades. It could be that he's this kind of someone who has this kind of behavioral traits who needs time to make decisions. So according to DISC profiling, so DISC, there's 4 different ways of decision making. The high D's behavioral people, and I say behavior because it's usually trained and it's not genetic. So the high D's, they need facts and figures to make decisions. And without facts and figures, they don't make any decisions at all. But when they have the facts and figures, they make the decisions really, really fast. The high I's are the ones who are really in touch with their intuition, with their feelings. They do what feels good. They have the shiny object syndrome. They would jump from one strategy to another because they just love it. So that's the high I's who make decisions based on feelings and intuition. The high S's, they are the ones who need time to make a decision. So if they were to go buy a car, they would go on a Friday, go to a dealership, talk to friends, get some material about cars that they like, and then they would say to the salesperson, give me the weekend and I will make a decision on Monday. I come back on Monday. So they need time. And then there's the high C's. The high C's we call, they're the ones who need a 3-step decision-making process. They would get information from, let's say, a friend who's a car nut. They would maybe get decisions and they would get information from, let's say, a website who does car reviews. And they would go to a dealership or several dealerships and get information from the dealership. So they need 3 different sources of information to make a decision. So if we have someone who is a high S behavioral type, there's 2 possibilities. Either they learn, and this is what I do with my traders most of the time, I want them to have access to all 4, to facts and figures, to the decision, knowing how much time they need to make a decision, and also have the 3-step process of making a decision, a really solid decision-making process. And so if we have someone who finds it hard to make decisions quickly, it could be that they're a high S, so then we can make a little test and see if that is the case at the moment. And or we can look at, and then we can say, all right, so do you want to change that behavior, or do you want to find a strategy that serves you? Maybe swing trading, maybe momentum, so longer term trading. So now the options are there once we know how that what is causing that behavior. Another situation, working with a trader who, again, excellent trader, 2008, had hurt really badly, lost $1 million 2008 because he didn't get out of his positions, eventually got out, and then we know the market turned and he was left behind in the dust with his $1 million gone. So he is a guy who hesitates because of the trauma of that experience of having done something bad. So with him, I would work with healing the trauma and finding peace with what happened. And this is the trader that he was then, but now 10 years later, he's a completely different person. And he's more responsible, and he has a team around him. At the time, he was trading all alone. And, you know, he's so much more knowledgeable now. And also then train and practice with him taking those trades, because now he's what we call gun shy. And we need to learn, like someone who, let's say, for example, many years ago, also 10 years ago, I ran down the stairs and I landed badly on my foot and hurt it really bad. So I can still feel that moment and hear that sound when my foot cracked. That's trauma. So it's the same with the traders. Every time I go downstairs, I'm still feeling that fear that I misjudge again and I hurt my foot again. And that's the same for my trader. Every time he gets into a trade, he still feels the pain from 2008. And so that's why he's seeing me to, to help him get through the trauma, because he knows how to trade. I don't need to teach him how to trade, but it's the trauma, the fear. Like, I know how to walk downstairs, but it's still that pain from when I fell over. So again, so many different reasons. The another reason I would say with not being able to execute trades is one of my favorite topics, Etienne, because so many times what I find with traders is they write down the methodology, right? And then they think just because they've written it down and because they have a post-it note on their monitor that they can do what they say they do. So the execution works. But it's not that way. Execution is a neural pathway from your brain into your index finger to press that mouse button again, right? And so you need to train and practice execution, getting in and getting out. And I always recommend live market replay. So don't assume just because you did your analysis in the morning and that you said, I'm going to enter the trade at this place, that you're able to do it. Maybe visualize how this trade sets up, right? So for example, someone who says, if the trade goes to my level and then has a, let's say, breakthrough, that's what the DAX loves, breaks through the level, comes right back in, I go long then. Visualize it, train your brain to do this. So yeah, 3 different versions of why we maybe hesitate to get into a trade.
Very interesting, and again, very in depth. So we discussed a lot about limiting beliefs and trauma. So how would you improve that, or how do you change that?
Limiting beliefs, I would usually look at where did the limiting belief come from? Because sometimes it's actually really interesting. I was working with a trader who, it's really interesting. So he had these voices in his head. And he would say something like, I don't deserve it. So I'm just reading it from my notes. You're lucky to have what you have. I'm a fraud. You're not suited for this. Everyone else can have it, but you can't. I'm shit. I'm a total fuck up. You don't have what it takes to be resourceful. That's so. Can you hear how it was I, you, you? So that these were the self-talk that he had when he was after he didn't do well in his trades. The I versions, that was his self-image. The you versions was what his parents told him, that was the echoes from the past. So I needed to work with those limiting beliefs on a different way. So the I don't deserve it, I then said, right, tell me why you don't deserve it. Because we trust your unconscious. If your unconscious thinks that you don't deserve it, then most probably you don't deserve it. You've done something that you feel guilty about, that you feel ashamed about, and you haven't found peace in it. I don't know about you, Etienne, but I've done so many things I feel guilty and ashamed and upset about that I wish I hadn't done, but I did them and I didn't know better at the time. And now I'm a person who wouldn't do that again because I learned from it. So confront whatever your unconscious tells you rather than brushing it away and looking in the mirror and say, yes, I deserve it. If your unconscious still says, no, you don't, your unconscious will always win the battle. If your unconscious says, you don't deserve it, I don't deserve it, look at why you think you don't deserve it and find peace in that. Now, if it is something like you should be lucky to have what you have, yes, of course, we should be lucky. Absolutely. Like we can be lucky that we live in a country where we actually can trade, because there's many people out there who can't trade. There's many people out there who don't have internet. Now, unbelievable as it is, but that's the reality. And so, yes, we should be lucky, but does it mean that we can't be luckier? And then when you identify it's someone else's voice, not your own, then you can just give it right back to them. You don't need to take that on board, and it's immensely freeing. So this is how I would work with the limiting beliefs. When it comes to trauma, we need to do something. So I'm trained in trauma, and I think you have witnessed one of my coaching sessions a few years back, where I did what we call a where we did some timeline work, and I witnessed the trader in their pain and help them to just feel peace. That it's hard to get into detail because it's so individual. But, yeah, did it answer your
Yeah,
question?
definitely. So it's about kind of being able to explore these beliefs, going more in depth into why you feel that way. And then how do you
so really write down
resolve that? Is
your
it through
beliefs.
meditations or through some other ways to resolve it?
I'm not really a big fan of meditation, but it's just me. Doesn't mean that it doesn't work. None of my big traders meditates. If you want to meditate, that's a personal choice, but I don't think it is necessary to succeed in trading. And there was a little bit of discussion on Twitter lately. One of my friends, Twitter friends, who is an extraordinary trader, worked for one of the best firms in the world, thinks that mindset is just not necessary if you know how to trade. So it's either right or wrong. It's just what works for the individual. I'm more of a fan of cognitive work, where you really write down your beliefs and then you question them. So you say, as I said, I don't deserve it. And then you look at why is it that you don't deserve it? Because most probably you do not deserve it in your model of the world. And then just look at, all right, so I did this, but didn't I do also some great work? Why do I need to deserve it even? And have conversations with people around it. I think it's always hard to do that on your own. It is easier to do it with someone like you, with your academy, where you create an amazing platform to have those kind of conversations with like-minded people, where we know we are not being judged, and we know it's safe to open up. Because with people outside trading who don't understand trading, it's not safe. Yeah.
Awesome. So let's get some questions, and we have a lot now, but if you guys have a question, you can also comment below and let us know your question after. We'll go through them pretty soon. We had a question here that was about, is it possible to become more high C in this profile, to increase your C, and how would that work?
Yeah, absolutely. So you also have experienced that you reduced your S, right? When someone has a really high S, that usually tells us that they're too much taking care of everyone else. We call that the mother energy. And it's great, right, to have mother energy, but it's also important to look after yourself. It has to be balanced. So you can make yourself more high C, and I did that. I'm naturally more focused on how I feel, and that really tripped me over, because taking a loss doesn't feel good, and then if it doesn't feel good, you don't take your loss. So high C is, as I said, it's a 3-step process. So make sure that you have 3 decision factors in your trading strategy. Let's say step 1, I look for trend. Step 2, I look for how far my price is away from a 200 or 50 moving average. Step 3, I look for a candle chart pattern if you're a detail-oriented person, or I look for a harmonics or Fibonacci level if you're more of a big picture person. So that's how you use, simply you understand how the high Cs think and operate, and then you add that into your life. And this is what I did, right? In my strategy, I naturally look for reversal patterns, and then I needed to retrain myself to look for continuation patterns as well, because reversal patterns kept failing, and so I needed to add another tool to my toolbox. That was really 2016 when Trump came on board. The market changed for me, and I needed to change the way I traded. And also Linda Rushke, she said very often that the moment when she started adding continuation strategies into her trading, had completely shifted. So this is how you add your high C, right? So you say, what are 3 pieces of information that I can draw on? So I would look, as I said before, naturally for a reversal pattern setting up. Let's say a double top setting up, meaning we have one top and then retracement and another top. I want to get close to the top as possible. I'm happy to take a failure pattern when it turns to a triangle rather than a double top, but I don't like to get in at the neckline, because I don't like the big stop loss that I need to take. So step 2 then is I look for divergence. So where price is now, is there a strong divergence on my stochastics? I also look for, is the first stop outside the Bollinger? And then step 3, I look for a candle reversal pattern on the second top, maybe a bullish, bearish engulfing, maybe a doji on the second top. And that is then my entry. So you can see it's so clear. So step 1, first top setting up outside Bollinger Bands. Step 2, is there a divergence? Step 3, is there a reversal candle that I can enter on and just put my stop loss above? Yeah, I never traded that before. Understood the risk profile. So that is, again, it changed my trading.
And how hard was it for you to be able to define these rules?
I was sneaky because for me it was really hard. It's, you know, it's hard if it is not your natural way of thinking. So I looked at how other traders who were high C were thinking. One guy, for example, Tom Dante, I think Tom is really high C. Most of you guys must already know him from Twitter. And so I took a lot of learnings from Tom's work, where he's so super organized, right? And organization structure doesn't come easily for me. And you know that, Etienne, because you're usually on the receiving end, because I'm unorganized when it comes to, I used to be unorganized. I think I have improved tremendously. I hope so, when it came to our work together. And you are super, super organized. And so we balance each other out. And I'm very grateful for that. So I also learned a lot from you, where you generously gave insights for me and how I can be better organized, automate email, etc. So look at how others who have high C trades organize themselves, structure their strategy, and then just learn from them. That's the easiest way. Don't try to reinvent the wheel.
Interesting. Here, a question that I found really also fascinating is, how can you start getting a more deeper understanding of yourself in order to change your belief about trading? So how can you understand better yourself and like what you face?
It always, always, always starts with self-awareness. Always. So I was studying Professor Huberman, Andrew Huberman, as you guys know, really in detail the last month. And so his Twitter is Huberman Lab. He's also on Instagram, and he is a neuroscientist to share the work that he does in the lab with with everyone in the world, because he says he's getting paid for it at Stanford University, and only 12 people read his research papers, and it's wasted money. So he does for free the training on how our nervous system works, how our brain works, etc. And he also says, in order to create change, we need to start with self-awareness. And he explains what happens in our brain, in our nervous system, in terms of chemical reactions and neurology when we have self-awareness. I don't need to know why. All I needed to know was that his neurological or neuroscience research confirms what I have been taught as a coach. So self-awareness, how do we do that? With journaling. Don't write stories about how you suck. Be factual. So you are in the trade. Let's say you started to revenge trade or go on tilt. Write down what were the feelings. Angry, frustrated, disappointed, helpless. For example, when you feel these feelings in your stomach, that my kinesiologist said this is related to lack of power. And I still haven't had a chance to ask her, if you have those feelings in your upper chest, what that equates to. It also has some metaphysical meaning, but I can't remember. So know where those feelings in your body are. Write down the thoughts that you have, that you say to yourself to justify why you do what you do. How do you justify? How do you talk yourself into binge trading? You know exactly what you're doing. How do you make it okay? Right? And so write these words down. these sentences down and then make another column and say, next time I will do a different behavior. So for example, was working with a trader who showed me a spreadsheet, and he took a lot of notes and he wrote down everything that he did wrong. So for example, he had this, I was in this trade, that was the one who was in a $1,500 profit, got out at a $500 loss, and said then in the next column next to the trade, I should have gotten out of my trade earlier. I left so much money on the table. So he kept talking about the past, Etienne. But what we need to do is we need to create a new future, right? So the next step is then to say, next time I will handle the trade and then the way you wanted it to trade. Right? And again, we need to distinguish between, is there a gap in our trading system, or is it really emotions? He thought it was emotions, but again, as we looked at his trades together and he saw where I would have gotten out, he had this insight that he needs to tighten up his exit strategy. So this is how you get a deeper understanding. You just really look at yourself, write down your feelings and your thoughts, and start with awareness. What you can also do is look at others. It's always easier to see in others how they make mistakes, and I always try to share on my YouTube channel little snippets of how I work with a trader and what challenges they had, so that you can see yourself in it, or on Twitter as well. And so this is how you gain awareness, where my traders say, oh my God, when you were sharing this about the other trader, I realized I do exactly the same. Because when we can't see ourselves from the back of our eyeballs, I always say, and it's our blind spots. So yeah, look at what other traders do. That's where you start, self-awareness.
Very interesting. So yeah, I think that makes sense. I'm sure if you have any question here. If you guys have any question, we can stay here a few minutes more to answer your questions. There was something here before that I wanted to ask you about. So someone was mentioning I guess a common saying in trading. Oh, well, here we a question from Michael. Let's do that first. How do you adapt and scale up your accounts when you grow an account and trade? So the risk in percent stays the same, but the risk in dollar kind of changes to big amounts. So what are your tips to scale up your account? I'll talk about this a lot on YouTube here, but maybe Mandi, you can share your thoughts and add more to that.
Okay, so the way I teach my traders, and it's an awesome question, because I did that with my one of my traders recently, and so what I did with him is I call it desensitizing. I think it's the name. When we have someone who has a phobia, let's say a phobia of heights, we get them slowly used to heights. And so I do the same with my traders in trading. Let's say they trade $1 per point. Then I say, go on Sim and trade $100 per point, and get used to what it feels like trading $100 per point. Then go back and trade $1 per point on live market. Now the next day you go and trade $2 per point and see how that feels. The day after you go back to $1 per point. Because now I want you to experience the difference of what it feels like when you expanded your boundary conditions and you expanded your comfort zone. So in my model of the want to get outside our comfort zone, we want to expand it gently and make it bigger, right? So then when you had $2 per point, you go back to $1.50 per point. Then you go to $2.50 per point, right? So you slowly increase, going back and forth, getting used to it. So this is what I would do in terms of scaling up my account. And this is where I have massively great results with my traders when they get slowly used to it. What most for most traders, the inkling is naturally to go big immediately. So they go from $1 to $10 a point to $50 a point. That is always setting yourself up for failure. Now, what I also want to pre-frame, which is really weird. And I see that every single time, but I don't know why, but this is just what it happens. When we talk about scaling up, my trader usually screws up the next day. I don't know why, right? So we're in the coaching session, we're like, dude, it's time to scale up. And so they're like, okay, you know, I'm a little scared. And I said, it's okay, but know that you first we have to screw up before you can increase your position size. And they do it. So screwing up in terms of going on tilt, letting a trade run into a bigger loss than they wanted to, not being able to get out, something like that. That's a lack of discipline happens. And when that happened, then I say, now you're ready to increase your position size.
Interesting. Very interesting. Awesome. So we had a question before, or one comment about this saying of you never go broke taking wins or taking profits, and you can go broke by being greedy. What are your thoughts on this? Do you think do you agree with this? I personally don't agree, but I want to hear your thoughts.
What's my outcome as a trader? Do I want to not go broke? Do I want to take my profits wherever I can? No. My goal is to be the best trader I can be, to bring out the best from me, to have high standards, high expectations of myself, to be, I don't know, the Navy SEAL of the traders. That's where I want to be. So it's not about taking profits on being greedy or not going broke, because this is outcome focused. This is not process focused. And we all know, whilst we need to keep the outcome, the money as a benchmark inside, because I mean, if I trade full time, I need to feed a family. I can't say I'm not looking at the money. Like that's the reality. And anyone who has problems with looking at the money, they have issues, they have limiting beliefs and fears around money. So they need to look at their money mindset. Now, that's what I always say. So it's not about taking a profit so you won't go broke. It's about getting out at the trade when the exit is being triggered. So if you had a trading loss of $1,500 over trading, what was the real problem here? The problem here was one of two things, or maybe both: a high level of anxiety and or lack of trading skill. And when I say trading skill, that could include that your strategy is not tested. It could include that your strategy works, but you haven't practiced executing your strategy. So the example is always like in sports, right? When you know how to play a forehand in tennis, you still need to practice it, because your theoretical knowledge is not the same as actively doing it. There's a gap between what you think in your mind and how your mind, the signals that your mind via the nervous system gives your muscles. That needs to be ingrained neurologically. It's the same with trading. The mind or the brain via the nervous system tells your little finger to press that mouse button. If there is no neurological pathway between your mind and your little finger, you're not able to press the mouse button. Really simple. So it's not about being greedy or not. It's about reading the market in such a way that you know that's the time to get out. And if you are being greedy, even if you say to yourself, I need to take my little profits, you won't do it, because there's an anxiety attached to it that leads to addictive trading behavior, binge trading, as I call it, and you will not be able to stop yourself. That's why it's so important to know your thoughts and your feelings, because what happens is you want to learn to be so self-aware that you feel the urge, that you feel the temptation, that you feel the impulsiveness creeping up well before you are at the mercy of it. So very comparable to someone who is an alcoholic, feels that they want to have a glass of wine now because they have anxiety. And rather than dealing with the anxiety and sitting with the anxiety and knowing that they can have anxiety and still be okay, and knowing that the anxiety is going to pass, they give in and they go to the bottle shop and buy a bottle of wine. So you want to learn, and once they have the bottle of wine, they're gone. There's no helping them anymore. The whole bottle is going to go unless you tie them up and take the bottle away from them. So this is what happens to traders who go on tilt. right? It's exactly the same behavior. So that's why self-awareness is so important, because you catch yourself faster. Right? Linda Rushke still makes the same mistakes like we all do, but she catches herself so fast, it doesn't go into devastation. It's like, oh, wow, you know, and she was just sharing on a video recently that she loves trading in the evening, and she has this thing where she sees so many opportunities and she puts all these trades on. Suddenly it's like, oh my God, too many trades. You know, I'm over leveraging here. I should not do that. And then she has to, you know, close out a few of the trades. She still has the same behavior, but identifies it, and she catches herself so quick that she immediately can rein herself in. And that's really what it's about. It's not about not having those feelings. It's not about not making mistakes. It's about catching yourself so quick that you're like, ah, I do that again. I need to stop it right now. So that's the gap where we can still make a decision. So yeah, that's where the that's where the self-awareness is so important.
Interesting, interesting. So I think it's been good, man. You just been a lot of advice. People in the chat really like it. Are there some thoughts you'd like before we finish off this live stream? Any quick advice or quick thoughts you have?
This market right now sets us up for binge and trading on tilt. I see that I get so many emails at the moment from traders who are going on tilt. I never seen that before. So because the market is so fast and so jumpy and changes, you know, turns around on the heel and then just jumps or just rallies back down, know that this market is it's like the sea, you know, like the ocean that's really stormy, and you want to surf in that stormy ocean. Be careful, know that it sets you up for impulsive and compulsive trading, and that you need to be really, really fast in responding. If you're someone who has played a lot of computer games, your hand-eye coordination will be really quick and you will do well in this market. If you're someone who's more like a high S, who needs more time to make a decision, be extremely careful in this market. That's what I would say. My parting thoughts. And what I would recommend you as well, learn to trade this market by going on live market replay and practicing it, right? So that next time you have this awesome market, you have this confidence because you have trained and practiced, you know how to read it, and you know how to perform in this market. So there you go.
Very good advice. Thank you all for watching. Thank you, Mandi, for your advice and your tips and all the lessons you shared today. And we'll catch you back here pretty soon.
Thank you, Etienne. Thank you so much, everyone.